Looking ahead into 2026, what does the future hold for private credit?
A large part of the GDP growth of the US recently is about building data centers. We will be originating more transactions from our fund. That's one topic. And
We are now at the very end of 2025. So, looking ahead into 2026, what does the future hold for private credit?
thanks, Johanna, for making me an oracle. Let me try my best guess what I see in the market and what I read from the reports. So there are three topics in 2026. One topic is the private credit lending will be moving beyond corporate direct transactions. Second topic is that there's a $3 trillion to be repaid, and that will show how the loans will be underwritten, who is able to repay, who is not able to repay. And the third topic, a little bit of basket term, there's going to be yield compression, and there's going to be more secondaries in the private credit. So I think these are the three trends which will be more visible in 2026. So unpacking them one by one, so beyond the direct lending is one of the largest segment of the private credit. Other segments are infrastructure lending, specialty finance, but with Kilde Talks as well. And the third is leverage buyout transaction. Infrastructure is very interesting. A lot of infrastructure money, especially in the USA, is coming to the building of a data center. Even some estimates are saying that a large part of the GDP growth of the US recently is about building data centers. And then with the data centers will they make money back by the use of AI, right? The AI is consuming a lot of energy, a lot of computing power. I think it's a bet on a technology, I would say on a top of the life cycle. So in the optimistic scenario, excellent. So they will build all this infrastructure, which will be then used later on, like after the AI has found the valley of productivity. Right. Similarly, as in 1990s and 2000s, this big internet bubble left all the optical cable. So that's general argument. We will see how it works. Especially finance, we have the bank are paying from car loans, mortgages, all those things from the prime segments. Sometimes even for the prime segments, so the private managers will play an increasing role. There is expected a more mergers and acquisition activity in the US, again in 2026, also due to the regulation, and that would spike the leverage buyout transaction by the sponsors or by the management buying out their companies. So it seems that the private credit will continue to expand. To the second topic about the maturity, so a lot of money has been spent, invested in 2020, 2021, when the interest rates are very low and the access to money from LPs was abundant. And there was a lot of loans underwritten during this time, especially in the mid-market. And now this loan is going to be maturing in 2026, right? After 3-4 years, that's the usual maturity of private credit loans. So on the positive side, it's going to be opportunity to refinance a lot of these. $3 trillion, it's a practically 100% of the size of the private credit. And but at the same time, it will become visible if some of the borrowers will have troubles, like which of the loans have been underwritten, how they've been underwritten. So there's a downside to it. If we see some systemic problems in the underwriting, which we haven't seen so far, despite news hype about First Brand, Tricolor, and so on. And then it will show. So the 2026.
Bit of a cleanup in
sense that
2026.
maybe we're gonna have a cleanup, maybe. And if it happens, probably gonna be US mid-market, and where we suspect. If we see the smoke, so probably there's a fire there somewhere. And the third, like more overarching topic, private credit to be continue yielding. high single digit, low double digit. Let's see how the interest rate in the US, what they do, how aggressively they'll be cutting the interest rate. That will affect the yield on the private credit as well. Also, one another thing which we see a lot on the private equity and on the VC side are the secondary transactions, where instead of going to IPO, so liquidity is created by existing holders are selling to new holders. So I think there will be much more of it in the private credit, and that's inevitable. Then the marketplaces are here for secondaries. The people are building marketplaces. Technology is here. Legal framework is here. The market custom is here. So I think it awaits the private credit as well. So exciting year ahead of us. So we will see some test
And a lot
scenarios.
of
The opportunity, as
opportunities.
always. The
Yeah.
opportunities is the further growth of the private credit opportunities that in 2026 show, okay, the underwriting is really good, so that this premium which the investors are getting over the public market bonds, this is truly a liquidity premium and true alpha, and not not a risk premium, right?
And the final question regarding Kilde, what can we see more or less of with Kilde in 2026?
We will be originating more transactions from our fund. That's one topic, and we will start offering specialty strategies by selected managers on our platform. So there'll be more interesting offering.
Exciting. All right. Thank you very much, Fredrik.
Thank you very much for having me.